Nvidia is worth more than the entire German economy. Companies add AI to their name and stock prices triple overnight. And Warren Buffett just dumped $75 billion in Apple stock. He's seen this movie before, twice, and he knows how it ends. Welcome back to Past to Profit, where history meets money. The AI bubble isn't new. It's the oldest story in finance. Repackaged. Again. Every generation thinks they've discovered something different. A technology so revolutionary that old rules don't apply. That valuations don't matter. That this time, it's different. It never is. Let me show you the pattern. Because it's happened before. 3 times. And every time, it ended in disaster. 1637. Amsterdam. Tulip Mania. Tulips arrived in Europe from Turkey. Rare. Beautiful. Exotic. And suddenly, everyone wanted them. Prices started rising. A single bulb cost more than a craftsman's annual wage. Then more than a house. Then more than 10 houses. People mortgaged their homes to buy tulips. Investors traded contracts for bulbs that hadn't even been planted yet. Fortunes were made in weeks. Everyone had a story. Someone's neighbor bought a bulb and retired rich. Why not you? The logic was simple. Tulips were the future. Demand was infinite. Supply was limited. Prices could only go up. Until they didn't. In February 1637, someone tried to sell and couldn't find a buyer. Panic spread. Within weeks, tulip prices collapsed 99%. Fortunes vanished overnight. Families were ruined. The Dutch economy took years to recover. But here's the important part. It wasn't about tulips. It was about narrative. People weren't buying flowers. They were buying the story. The belief that something new and rare would keep rising forever. Sound familiar? 1840s. Britain. Railway mania. Railroads were revolutionary. They changed everything. Transportation. Commerce. Communication. The future was obvious. Railroads everywhere. Investors poured money into railway companies. Hundreds of them. Most had no track, no trains, just plans and promises. Stock prices soared. Everyone wanted in. Parliament approved over 600 railway projects in just a few years. The narrative was unshakable. Railroads were infrastructure, essential, unstoppable. You'd be a fool not to invest. Then reality hit. Most companies never laid a single mile of track. Others went bankrupt after building lines nobody used. By 1850, the bubble burst. Thousands of investors lost everything. Banks collapsed. The British economy stalled for a decade. Again, it wasn't about railroads. Railroads were real, revolutionary even. But the valuations? Insane. The story outpaced reality. And when reality caught up, the story collapsed. 1999. America.com bubble. The internet was changing the world. Commerce. Digital media. Instant communication. A new economy was being born. Companies that added .com to their name saw stock prices double, triple. Some went up 1,000% in months. Pets.com webvan. eToys. Billions in market cap. Negative profits. Didn't matter. Revenues didn't matter. Earnings didn't matter. The narrative was everything. The internet is the future. Old metrics don't apply. Get in or get left behind. Warren Buffett refused to buy tech stocks. People called him outdated. A relic. He didn't understand the new economy. Then March 2000 hit. The Nasdaq peaked and started falling. Within 2 years, the index dropped 78%. Trillions in wealth evaporated. Most .com companies went to zero. Buffett was right. Again. Because he understood something most investors didn't. Technology can be revolutionary and still overvalued. The internet was real, but the prices, insane. Now look at today. AI stocks. Nvidia's market cap hit $3 trillion. More than the GDP of France. Microsoft, Google, Meta, all betting everything on AI. Startups with no revenue raise billions just by mentioning artificial intelligence in their pitch deck. The narrative? AI will change everything. Jobs, medicine, entertainment, productivity. Every industry will be transformed. And they're right. AI is real, revolutionary even, just like railroads, just like the internet. But that doesn't mean the valuations make sense. Warren Buffett sees it. He's been selling. $75 billion in Apple stock dumped in 2024. His cash position now exceeds $300 billion, the highest in Berkshire Hathaway's history. He's not betting against technology. He's betting against insanity. Because here's the pattern. Every bubble has the same ingredients. First, a real technological breakthrough. Tulips were new to Europe. Railroads did change transportation. The internet did revolutionize communication. AI is transforming computing. Second, a compelling narrative. This changes everything. Old rules don't apply. You'll regret not getting in early. Third, exponential price increases. Fueled by FOMO, fear of missing out. Your neighbor's getting rich. Why aren't you? Fourth, detachment from fundamentals. Profits don't matter. Revenue doesn't matter. Only the story matters. And fifth, the inevitable collapse. Because eventually reality catches up. And when it does, the story stops working. We're at stage 4 right now. Fundamentals don't matter. Nvidia trades at over 50 times earnings. AI startups raise billions with no path to profitability. Analysts justify it with the narrative. AI will create trillions in value. These companies will dominate the future. Maybe, but that doesn't mean today's prices make sense. The dot-com bubble taught us that lesson. Amazon survived. So did Google. But they still crashed 70 to 90% before recovering. Being right about the technology doesn't protect you from being wrong about the price. History shows bubbles always pop. Always. The only question is when. Tulips lasted 3 years. Railways lasted 5. Dot-com lasted 3. How long will AI last? Nobody knows. But the signs are here. Valuations disconnected from reality. Retail investors pouring in. Celebrities shilling AI coins. Venture capital flooding every startup with AI in the name. Warren Buffett built his fortune on one principle. Be fearful when others are greedy. Be greedy when others are fearful. Right now, everyone's greedy. And Buffett's sitting on $300 billion in cash. Waiting. Because he knows the cycle. Euphoria turns to panic. Greed turns to fear. And prices that made no sense going up make even less sense coming down. The AI revolution is real, but the AI bubble, also real. And history doesn't repeat, but it rhymes. Tulips, railways, dot-com, AI, different technologies, same human behavior, same pattern, same ending. If this gave you a new perspective, hit subscribe. History has the answers, and on Path to Profit, we'll show you where to look.